you wouldn't mind tell everybody about your background. You have a super impressive background and all the things you know, and I'd love for you to share that with everyone if you don't mind.
Well, sure. I don't know that it's super impressive, but it certainly is a lot of years, which probably dates myself. So I've been in the payments and financial services space for about 25 plus years now, and played various roles in various organizations within what I call the value chain. So actually started my career early on in human resources and employee development. And I guess somebody along the way tapped me and said, yeah, while you have really, really good people and leadership skills, we'd really like to bring you over to the business side. And so migrated over into the business in client relationship management, sales, operations, product innovation. So I almost worked in every functional area in an organization with the exception of finance. Although I spent a lot of time with finance people.
Yeah, I love it. We were talking with Matthew.
Sounds like both of our background,
right?
Yeah.
You know, the old days, they used to take people and bring them into a bank in the old days, and they would take these people and put them through different departments of the bank for a week or two, and everybody would learn everything. And the lost art of everybody understood. Of course, you can't do that today. There's too much flow.
Now we celebrate silos.
Yeah, now we all have silo expertise, and nobody understands banking, so it's really cool.
Yeah, that's great.
Yeah. Yeah, that I mean, there is something to say about, I mean, I've had bosses used to always say, oh, you're a great utility player. We can put you anywhere in the organization. I was also known as the person that was brought in when things needed to be fixed. So, all right.
The same language. I'm like, so I always get the crummy job. Is that how that works out? And typically the answer is yes.
Yeah. Right. And very little glory, right? So, but that's fine. So that's been my path to success through various organizations, program managers, banks. I'm a consultant now. So that's super interesting. Having left corporate America about a year and a half ago, a little burned out from COVID, needed a break. My husband and I moved from the Midwest out to California. So make a little bit of wine out here on the side. So that's a little bit fun. Yeah.
Thinking about that too. That's pretty cool.
Yeah. Yeah. So consulting now, working with lots of different types of clients. It's a really exciting time to be in the space. There is a lot going on.
Yes, we certainly agree. And I think, you mentioned program management. The BaaS space is, I don't know about you guys, but I had an interesting weekend. Phone ringing off the wall, right? Just there's a lot going on between, I think, what we all used to know as program managers. Now let's call that a little bit of technology on top, and we're all calling them connectors, right? And these platforms that sit between, and just the entire banking as a service space is really interesting right now. And I think there's been a lot of news out that's just wild, right? There's a lot of shakeup going on.
Yeah, there's a cool moment in time right now, and I'm not sure everybody's seeing it, but a lot of people are. That this is so interesting to me. Man, it's like new things come along, and it takes 10 years for people to start seeing a lot of it, and then everybody's like, goodness gracious, and about that moment is when how we did it and how we're about to do it changes in a significant way. And it's always there's something that happened, who shot JFK, how did something happen there, right? And then it boom, and it's bad news, and then turns into good news.
Sure. And
I think we're having a little bit of that right now in this space, and it's really, really cool because it's a transitional period. You've got Galileo bought by SoFi. SoFi becomes a bank. I mean, it's like all these cool things happening, and then we have bad things with regulators that turn into super positive things of how banks are actually able to implement and change and move forward on some of this stuff. And in the end of it all, this is what's really cool to me. Every single time in my whole life, there's one thing that rings true. The U.S. banking system is solid as a rock compared to everybody and everything out there. And everybody is so fast to condemn it every single time. And it's like, give it time. Give it time. It's good.
Yeah, no, I would absolutely agree with that. I mean, I think that we were going through a little bit of a sleepy period about 5 years ago. And then all of a sudden we saw this explosion of fintechs. defined many different ways, come into the payments and financial services space. And, I really see them to be positive disruptors because, again, they're innovative, they're agile, they're focused on marketing and technology. So I think they woke everybody up, including the banks. The banks are a bit frantic right now. They don't want to become irrelevant. But I think we're probably reaching a place where we're seeing the regulators come on board and look at a few things. And, some of the banks that have gotten into the space, even the fintechs, are exiting. They realize there's no shortcuts. You have to do the work. There really is a playbook and foundational work that has to be done. There's no way to get around that. And so I think what we're going to reach is a steady state of, those that, are willing to do the work, willing to make the investments that are going to rise to the top. And then some of the other ones are just going to say, you know what, this is not what we thought it was going to be.
Yeah.
So I think we're going to level off.
Yeah, one that grabs me in this, you talk about 5+ years ago, and I remember the earliest days of a lot of these conversations, and then it was really weird in that 5-year space how quickly the attitudes changed, if that makes sense.
And we went from down with the banks to, can we partner with you?
Yeah, but you also had this time where you had newcomers that had been around the space for an hour, right, but had worked with a handful of folks. And they thought that they saw how things sort of originated the early days of 2 years before. And so they thought that was the birth of this arena, right? And so nobody ever asked the question of, was that the right way to do it the first time? And I was always of the opinion that we did it wrong the first time. And so you've got a lot of experts out there right now that are experts in the last 5 years versus you guys, right? That have probably had a bit of an opinion long before 5 years ago, right? And might have seen some errors in how things were created.
So I got a big question for you. All righty. So if we're going to take the notion that, 2008 and after that, we lost a bunch of institutions. And then, I remember the day I got a phone call from somebody, and I don't want to say any more than that, but they couldn't figure out how to start a de novo. And these are the people that are in the business of granting charter. And so it was like, you guys don't have anybody left? And they're like, yeah, they all said to call you. That's not cool.
Scary.
And of course, we went down this road now to where there's so few charter. We used to lose 100 banks a year and we'd create 100 banks a year. Now it's like we create 6 and we lose 100 banks a year, 250, right?
250.
So it got into this crisis moment almost of, I'm not going to say almost, one hell of a crisis moment of decline of institutions. And then you have this vast number of technology operational things that open up. I think my dog has a fintech. I'm not sure, but he's issuing a debit card.
So are fintechs the new de novo? Is that the question?
Right. That was my question. And since, that's not technically true, who went to sleep at the wheel that started letting all these things become more democratized? Or is that a good thing?
Well, I think everybody got comfortable. I think we've seen an evolution of products in the payment space. And so I think what happened was, there was a maturity around what I would call, your traditional prepaid products. And, we're going to compete for market share, who can sell to more of the unbanked, the underbanked consumers kind of thing. And everybody was just ticking along. And then I think actually when the fintech started to enter the space, they were much more focused on how do we create solutions and services that are more than just this card product. And so frankly, a lot of the fintechs came into the space and they actually didn't even touch prepaid. They went in and they said, we really like DDA because we want to create, banking as a service. We want to create a broader experience. And then on top of that, there was the whole movement from B2C into B2B. Most of the fintechs that I work with now are moving right directly into the B2B space or B2B2C. For them, they're saying B2C is too saturated. And so with that, then I think the fintechs are very innovative. They understand their consumers. They know how to market to them. They understand what kind of products and services they want. And so they've been really pushing the banks, to say like, you need to become more innovative in terms of providing all the services that you normally do, but in a meaningful way where you're willing to have the discussion about how do we create a sustainable, defensible product. and so, which is hard for banks to do because they're not known to be innovative. Compliance is paid to say no, so a lot of the banks that we work with struggle with those things. That's just the reality.
It's just paid to say no.
I know. So I think that I think that everybody in the industry, regardless of where you're set in the value chain, processors are going to process, the networks are going to provide the rails, banks are going to continue to have oversight and issue, and the program managers are stealing market share from one another. Yeah. And so all of a sudden the fintechs come in and they've got some new innovative ideas, and then everybody sort of woke up and said, whoa, what's going on here? They got a lot of funding. Of course, we've seen a slow to that. And some of them were making some real noise. Look at all the money that Chime has spent on marketing in the early years. I mean, unbelievable amounts of money, and look at their business now. So, that's a non-traditional player versus some of their competitors that were legacy program managers in the space.
Robert made at Sutton, he made the point a lot that there are things that have happened, like it or not, that have changed the game, whether it's fees on trading or whether it's overdraft fees in banking. Some of these things they've made a change that's affected everybody, and it's not going to go away. And whether it's positive or negative, for the consumer, they're positive. No doubt about it, or they wouldn't be accepted as the way they are. Right. And so we kind of get to this moment in time to where the fintechs are doing their thing. The banks are still trying to be like an operation center, run their own bank, and then enable these fintechs. I think there's a time coming, and this is really a question that we're all trying to figure this out. Are the banks one day going to go, okay, now we understand everything that's cool and everything that they do, and we are the bank, so we can do it too? Or are they just going to cede themselves back to a regulatory back office?
Are they going to be complaince-as-a-service, right, or are they going to fight on the retail fight? That is the question of the hour, my friends.
Yeah. So I think that, I'm a big believer in everybody has a role to play in the space, and leverage your core capabilities and your strengths. So that's why this whole, God love the fintechs, but you know what? You guys don't need to be banks. Because by the way, if you become a bank, you're going to be bogged down by banking activities that are then going to compromise all the things you do well. So be program managers, be distributors, and just do those things well. In terms of the banks, I think they're a long way from becoming program managers. When I worked at MetaBank, we had a population of banks that we worked with. We were program managing for them. It was so hard to get culturally our heads wrapped around how do we become a program manager versus we work with program managers, fintechs, embedded, payments providers. It was a real struggle. So, I just finally said, why don't we just focus on the things we do well, and be just a phenomenal bank. So, some of the things that I do think there are places where the banks can actually develop better capabilities. So, I think in terms of having flexibility within what they're willing to approve and what they're not, is really key. I also think that, be more agile in terms of speed to market with their partners is really important. I think technology is an area that they can focus on, whether they build better technology, buy technology, partner, because banks are not known for that. And I think that they probably could do some work in that area, even though I know many are strapped by their core systems. But there are things that banks do well. Keep doing those things well. You manage money effectively. There is just, to your point, the U.S. banking system is based upon the level of security that these banks provide. It's really important.
Well, this value chain that you were talking about. So the value chain for everybody out there.
Sounds like you're talking to a treasury person,
the
right?
Bank
Value
and
chain.
The consumer.
That's
and
their
value
word.
Chain between is the deposit relationship and the insured deposit relationship that goes with there. Yep. When you step into the middle of that thing, this is the program managers facilitating fintech. Meta, I always tell everybody that they have bent a prepaid card to where you can't even tell it's a prepaid card anymore. Right. The idea of this just went, whoa, so far over here in such an innovative way and such a cool way. It changed the game for everybody forever. And so all of a sudden the fintechs start seeing they don't understand the value chain. They just understand, hey, this little technology opportunity and we'll turn it into a frog or we'll turn it into a buffalo. Right. And whatever it is that they're trying to serve with that technology. And so the bankers being able to accept and understand these curves and still own the value chain is the key
Yes.
to everyone's survival.
Agree.
And they're not going to turn. I hope
Those are really well
nobody
said.
decides to start granting fintech charters. We don't need more competition for banks there in that value chain.
It's a disaster.
No, we absolutely don't. So now I do see a number of, some of the traditional issuers. Obviously, the bigger banks are getting out of it because for them, it's not, the margins aren't worth, for what they have to put into it from an infrastructure and a risk and compliance.
And can I ask you about that?
Sure.
Do you see, if I'm a big bank, if I'm JP, is it actually indirect competition on a business where I already have the direct business? So think about this. If Lexus came to JP and said, we want to do a Lexus card, right? JP already said, he sits and says, okay, we've got, maybe you could bring 10 million cards, but I've already got 5 million of those. Why do I want to rev share and work indirectly with you to do that, right? And so I think the big nationals, there's a channel conflict for them with working with partners. Is that crazy thinking?
Yeah, no, I don't think it is. I think the question is, I've worked in lots of organizations where we've had direct and channel sales organizations. I mean, can you effectively compete? We always believe that, if we can't get it one place, we'll get it the other one. Right. So something is better than nothing. But a lot of the banks are getting out, the bigger banks are getting out because of Durbin. And frankly, they can't compete from a financial perspective with some of the Durbin exempt banks, which are enjoying a greater amount of interchange, which these days is 100% of that is getting returned back to the program manager, whatever they're calling themselves these days. And so that's really important in terms of the financials there. I think what we're seeing is though some of those traditional or legacy issuers are starting to have some balance sheet issues. They desperately need to keep below that 10 billion in the Durbin, in terms of Durbin, in terms of the assets. And what they're finding is they're having some problems doing that. And so I think what we're seeing is a lot of banks that are suggesting that they might want to get into the space that have a lot of room on their balance sheet. However, again, those that you mentioned it earlier, they have no idea what the value chain looks like. So when we work with clients and they say, I've heard things like, well, I went to a FinTech conference and 5 FinTechs said they would love it if I would be, a payments issuer. And, I'm like, okay, well, 5 FinTechs saying that they would love that is not a strategy or a plan or actually even a great market assessment. And so I say, you know what, before you even hire me, let me take you through what the value chain looks like and who does what and what the financials look like at a high level and what really is going to be the work that has to be done in the level of investment. And then you can make a decision whether you think you want to do this or not. And probably about a third of those that I've taken through that, they decide this is not the right time. This is too much. This is going to impact the core capabilities of what I do. Maybe it's lending, for example. And this is, I'm not going to do this. And I had no idea. So, which to me, when I, consult with somebody like that, even on a short-term basis, is a real win.
I love that. We actually kind of preach the same thing internally to our team. It's disqualify in a really kind way, provide value, give them everything under the sun to find out why we shouldn't do business together. Yeah. Because the last thing I can live with a pissed off prospect, right? And I would love to give them stuff for free and I can afford to do that. And probably I can lose a deal and have somebody that's a friend. Great. But I can't have a pissed off customer. I cannot afford that. Right. Yeah. And so I love, and it bogs you down. It bogs them down. That's smart.
Well, and it's bad for the industry. I mean, let's be honest, when these people get in the industry and they take shortcuts and they don't understand what the playbook looks like, then you've got the regulators coming down, you've got missteps, you've got exiting, you've got unhappy consumers. We already are working under administration where they're very focused on consumer harm, and it hurts the entire industry. It brings us all down. So the more that we can protect that, the better off we're all going to be.
There's, on the BAS board and the Banking as a Service Association, I mean, we get a lot of this where, gosh, should we write this? What best practices? What's our standards? And it's like, we got it. Somebody write that down. And I'm like, we're going to need more paper, boys and girls, because there isn't a way to do this because everything is situational. And when I try to talk to people about that, in my little football analogy, you can't run the ball up the middle every single time. And so back to your point, you have to balance your balance sheet, right?
That's right.
ways to do all of this stuff. And everybody, then you get back to, where do I start? Okay, well, let's just give you this whole informational thing that you're never going to understand, and then tell you where you got to start, and then say, trust me. That's not a good way to play this game, y'all. But at the end of it all, there has to be a responsibility that's taken on by every party in this food chain to ensure the consumer's protected, that this is done in the cheapest, fastest, most efficient, and most compliant way, every step of the way. And you'll find this is really easy. It's not as hard as it used to be. There's a lot of easy ways to step into this. Kind of lean into this a little bit. Let's do one brand a year.
Yeah,
goes.
one small program.
Okay,
is
it's not hard.
Right.
We'll build you a balanced approach to this thing over time. This is not that tough to do. And but let's all write it all out and show and virtue signal to the internet that we know what we're doing. And it's like, there's more.
That's almost
there.
for sure guarantees you don't know what you're doing.
That's exactly right. That's exactly right.
Yeah, we encourage all of our clients to go into it with an MVP approach, and pilot. And again, not to onboard 10 clients at one time when they really don't have a lot of experience. Because the other thing is that, they're going to have to hire talent. And the talent in the payments and the financial services space is very scarce right now. Yeah. And people are constantly calling me, saying, hey, listen, I'm trying to look to fill this role, that role. Do you know anyone? It's just so, it's hard to find good people that have the right amount of experience. So
I'm kidding, man. What we do for a living is point people to people like you, or point people to people like that person or this person here. It's like, I don't do it all. I just understand it enough to know who's good at it and who I trust.
That's right.
I'll tell you who I don't trust. There's any son of a gun that comes up and tells you, hey, it's easy. Just plug into me right here. I'll bring you all the fintechs. I'll take care of everything. We're fully compliant. Don't worry. And we'll take all your money.
Trash.
Whoa. Yeah. You should be anything that sounds like an easy button, run.
Yeah. There you go.
No, I agree with that. And I think people are starting to learn that there isn't really an easy button that exists. And so again, do the work. I was talking to somebody from a bank the other day, and they are in the issuing space, but they're wondering, should they grow? And so he was sort of interested in what the market opportunity was looking like. And I don't want to be like everybody else. And how do I avoid that? And I said, well, first of all, I go back to, what is your enterprise strategy as a bank? Like, let's start at the very top here to figure out if growing this piece of business even makes sense for you, based upon your, 3-year, financials and your strategic objectives, and because it may not be. And then from there, what are your competitive differentiators, do you think, in terms of where you sit in the market and what you have to offer? And then I said, and to be honest with you, I said, the banks don't have to really innovate around product because there's enough other people innovating around that. I said, but where the banks get tripped up is, again, they don't want to develop a strategy. They don't want to develop a deliberate plan. They want to jump in and go right to execution. And then they wonder why they're not successful. I said, it sounds fairly simple and basic, but I work with more banking partners that are just activating on all sorts of things, again, without understanding really how the space works. And then they're wondering why they're not successful. So the winning strategy actually is probably less complicated than the banks think.
She's got a better vocabulary than I do. I just ask people what they want to be when they grow up.
But I love it.
There you go.
The thing I think that
us consultants, we gotta have big words for everything.
We would drive you crazy, because what she's really saying that I think we hugely agree on is most people's strategy is tactics.
Right.
Yes.
And that's what we do most of the time. As I walk in and I go, your whole strategy is actually tactics. Let's get a real strategy.
I've got some really cool different, I could talk about different partners we play with, or vendors, or whatever you want to call them. And, I want to start this thing, and this is what I want to do. And we really talked it out, and I think they've got a good idea, and it's really cool. And I send them over to this person, and they are like, write it out. Write out your little business plan. It can be 5 bullet points on a napkin, but write out your little business plan for me. And it basically is what you're saying is, let's get back to an enterprise strategy, and then we'll tactically execute this thing from there. But when you see butterflies coming all over the place and distractions, it's like, yeah, we were going to do this card thing, and now we decided that we're going to go ahead and do a buy now, pay later instead. And it's like everybody's stopped.
Yeah.
There are companies and pieces that do each of these pieces, and they have competitors. And this piece over here, and they have competitors. You don't have to build it all. You don't have to.
That's exactly right.
But you damn sure need to go where you're going. And
That's right.
I think it's so cool, and I believe this is going to happen more and more over time. Is that we've enabled, let's say I'm a chartered institution and I've enabled, 5 or 6 different brands, and I got some buddies and I watch what they do and their brands over here. And I'm starting to figure out, this really is kind of banking. It's just a different interface for it. And I got branches, I got all this stuff. I could do that too. Well, let's begin to start looking at the financial impact of this and how to go about it, and realize that we can do what they can do, but they cannot do what we can do.
I'll put this into a nutshell real easy. He believes that banks are going to work enough with brands to learn the cool, innovative things in culture and apply that to the bank's own go-to-market strategy, right? Whether that's to retail, the businesses, etc.
The days
I
that we're gonna
believe-
use Spicer
hold on.
mobile.
I believe
Why?
that we're actually going to shift that retail and business delivery of a bank to third-party indirect. I don't necessarily think we're all going to call it FinTech some years from now. I think we're going to see more on the lifestyle brands. I think Starbucks just blows my friggin' mind. It does, man. I mean, I watched my wife with Starbucks and I'm in the car and I'm like, I'm a FinTech guy. And I'm like, I'm offended about who I am after watching how good that was, Damn it. Right? I should have thought of this. So
This is great. On Saturday night, he's telling me, so we have to park here and then we have to go because it's faster.
You know,
And
it's
we'll do-
just-
but we're parking, but we're walking in. Why are we doing
I'm
this?
so
It's a whole system, right? And I mean, everybody aligns by it. It's amazing.
absolutely.
Yeah, that's interesting. I think you'd have to have a fairly significant cultural and talent shift or transformation for banks to end up like the former. I think the latter is probably more realistic, but we will see. I do think there's a space for everybody in the value chain, as long as you know what are your core capabilities, what are your strengths, and what do you buy, what do you build, what do you buy, where do you partner? Because those are going to be some key things that people are going to have to make decisions around.
Man, I'll tell you what, this is the coolest time ever. And I say that about every year, and everything it gets cooler the next year.
I know, right?
You've got the bright kid in school that's super smart. And it's like, I want to be an elementary school teacher. And I'm like, oh man, nobody's going to say 2 + 2 = 4 the rest of your life without getting burnt out. But when you study the stars, there's no end to it. And it's just constantly more to learn. And I think that's what banking has turned into. The cool kids are probably at some point going to figure this out. And we work with universities and stuff on their banking schools, and it's all of a sudden a really neat thing. It's complicated. There's no end to it, and it's evolving and changing.
Oh yeah.
The regulation and the rule book is evolving and changing a little bit. And it's such an interesting time right now. And the people that like you, golly, man, wouldn't you like to hang out with her for an afternoon, right? And just pick her brain, ask questions, and then get the whiteboard out and maybe some dominoes and just kind of figure this stuff out a little bit. And I'll bet you these cool kids are going to figure out how cool this is one of these days and start
The
playing.
opportunities are amazing right now. It's a super exciting time. I would agree. So
Hey, I want to give you final thoughts. I always tell everybody we talk about just randomness, anything under the sun. What's on your mind? What do you want to say or pitch or anything you want? Just give you a minute, whatever you think.
I mean, again, I would go back to some of the basics in terms of, if you want to enter the space, what do you need to do? You need to take a look at what strategically, where do I want to play? Where do I not want to play? So I don't get distracted by the squirrel, the silver bullet. We see that a lot. What is that plan going to look like? I'm not going to get a return on my investment in 3 months. I may not see a return for a year. The full return may not be for 3 years. Like, take it seriously, do the work, get to execution, be effective, and be a strong player within the space that continues to lift us up and contribute to the fact that there will be more opportunity in the future. Be positive about being a player in the space versus I'm in it to make a quick buck. I got got some funding. I want to sell in 2 years with this valuation. I just think that those organizations, while interesting, probably belong in a different space.
Right.
You know what? There was
Sound
once
like
upon
you.
a time, there were people that got in a wagon with no electricity and made their way to the Pacific Ocean across our country. We're made to do this. This is who we are.
Yeah.
But the cool thing is, one day they built a highway and put a car out there, and it's like, that was a hell of a lot easier than it used to be, and we have air conditioning.
Yes.
Call people like her.
That's right.
Please save yourself so much bullshit.
Right.
You have the spirit to do this. You have the want to do this. And it's not as hard as it used to be. Just pick up the phone and call the smart people.
Right. We're happy to help.
You wouldn't be here if we didn't trust you and we believe in you. And what her background and what happened over at Meta and where they're at today, they're sharing information that you would learn and spend so much to know.
You bet.
It's great to have people like you leading the future.
It was awesome to talk to you. Thank you so much for coming on.
Thank you guys for your time today.